and welcome to the Spark Accounting Solutions Show. I'm JennyQ, and I'm excited to be here with Julie Babcock-Hyde, who is the founder and CEO of Spark Accounting. She's a CPA, CFM, QuickBooks Pro Advisor, Profit First Professional, and that's just the beginning. So hi, Julie.
Hello. I am so happy to be talking about our topic today because there's three things I know.
Oh, wait, I have to just say this. You know a lot more than three things, but all right. We'll go with it.
There's three things on this topic that I know. Number one, kids cost a lot of money.
Well, that part is very true.
They're either breaking their arm or they want you to buy cookies for the school fundraiser or they need new clothes or whatever it is. There's always something with kids.
All right.
Number one. Number two, I know that I have to pay taxes. And number three, I know that I would always like to pay less taxes. And if there are ways that I can benefit from those expensive kids on my tax return, I'd like to take those.
Yeah, because honestly, prior to seeing the outline of the show, I only thought, well, you get your exemption on your taxes for having a kid.
Yeah.
Right. So, but we're going to cover 5 ways your kids can be a tax benefit for your business.
Yes, we are.
All right.
Yes, we are. And there's more than 5 ways, but we can only do 5 today because we only have so much time.
Well, exactly. But it's good to get started on these, and then people can take these and take them to their tax professional or their CPA and find out which is the best fit for them. And also, as we're talking, think of which will be the most beneficial way for you to use it in your business. Okay, so Julie, are you ready to kick us off?
I'm ready. So our first item is, let's make sure you know what the new rules are. So JennyQ just mentioned exemptions, and guess what? Under the new tax rules for 2018, we don't have exemptions anymore. How about that? So our children are no longer exemptions for us, but they did do a nice little trick for us. They actually doubled the child tax credit. So now for your kids under 17, where you used to get $1,000 for them, now you're getting $2,000 for them. And up to $1,400 of that is refundable. So that's a nice little break. They've also expanded the income limits because a lot of people used to phase out and not be able to take advantage of the child tax credits. So now, as long as if you're married and your income's $400,000 or less, you're still going to be able to take advantage of it. For single individuals with kiddos, it's $200,000 or less, and you're still going to be able to take advantage of that child tax credit. The other thing they did, I don't know if you remember when one of your kiddos turns 17, suddenly you didn't get the old child tax credit anymore.
I don't remember.
Because you're like, oh, I've lost $1,000. I guess my child's not worth that anymore. Now they have a new one that's a $500 credit for other non-child dependents. So examples are your kids over 17 and over. Sometimes it will apply to parents. If you're taking care of your parents, it can apply to your parents and some other situations as well. So definitely look into that. But I wanted to start there. That really doesn't have anything to do with your business per se, but I wanted to make sure people were aware of that because a lot of people are not familiar with the fact that exemptions are gone under the new tax rules.
Well, clearly I wasn't.
Well, you're not alone. You are absolutely not alone because that's brand new for 2018, and people are just getting exposed to it as they get their tax returns done this year.
Right. That makes sense, I guess, because we don't really, as a general population, keep up on all the tax. That's why we have you.
Exactly. That's why it's important to have a tax professional in your life. Absolutely. So
sure.
If you've got questions about that, make sure you clarify who qualifies for what when you go get your taxes done this year and have that conversation so you make sure that you get those credits if you're entitled to them.
So let me ask you this question. With that change,
yes,
does that maybe incentivize or should it incentivize business owners to pay closer attention to what you're about to share with how to maximize the business benefit?
Most people with the new tax rules are coming out ahead because in addition to exemptions going away, they they made the standard deduction a lot bigger.
Okay.
So that's offsetting it for a lot of people, that plus this double tax credit. So not everybody's ending up in the place they want to be, though. So make sure when you go get your taxes done, if you don't like the result, you ask your tax professional. If you can come back after April 15th and talk about 2019 and ways to plan for 2019 better. And you'll notice I said that. After April 15th, schedule a time with your tax professional, because the truth is, and I always say this to people and people laugh at me, but you are not probably getting the top creative planning mind out of your tax accountant this time of year. They're just trying to get everything done. Let them get done what they need to get done. Let them catch their breath, come back after April 15th and have a conversation with them when they have a fresh mind. They haven't been working 12, 14-hour days. That's when you want somebody doing tax planning for you, not when they're exhausted. So
okay, that makes perfect sense. And tax professionals everywhere are, if they hear this, they're going to be like going, thank you, thank you, thank you.
Yes. Yes. It's just a good general practice. You never want anybody when they're exhausted. So give them a chance to recover. Okay, perfect.
Number 2, childcare.
Childcare. If you're going to work, if you're going to own a business, you probably need somebody to watch the kiddos sometimes. So there's a couple different ways that you can benefit from your costs with childcare. And the first way I'm going to talk about is what I think is one of the best ways, but most small business owners don't have access to this through their small business. They often have access to it through their spouse. So have you ever heard of a flexible spending account before?
Yes.
Okay, so bigger businesses tend to offer those as a benefit. And so there are flexible spending accounts for medical costs and for dependent care. And we're going to talk about the dependent care side right now. With dependent care, you are able to put money aside in your flexible spending account. It comes out of your check, the paycheck, often the spouse's paycheck, pre-tax. And when it's pre-tax, it's not just pre-income tax, it's also reducing your Social Security and Medicare taxes as well. So it's kind of a trifecta of tax benefits, right? But so definitely, that's something to definitely look at. Now, if you want to offer that in your own business as a small business owner, that is a possibility that you can do a flexible spending plan, but you want to make sure you work with somebody that can help set it up for you correctly. Now, one thing to note is that not all types of business structures, the owner will actually qualify to participate. So if you have a sole proprietor and you've got employees, you can offer this to your employees, but you may not be able to participate in it yourself. So it's still a nice benefit to have for people. So it's something to look into, and it also saves you money as an employer. So most people are hitting up their spouse for this benefit. So check that out. But if you don't have a spouse that has this benefit, you're going to be looking at the child care credit.
Okay.
So the child care credit is actually a credit that you take on your tax return. You can take, it's a percentage of the amount you spent, up to $3,000 if you have one kiddo, and up to $6,000 if you have 2 or more kiddos in child care. The percentage that you actually get goes up to 35%, but it varies based on your income level. So some people will get 0, some people will get 35%. So if you can't do flexible spending, which is choice 1, then you're going to look at your child care credit. And so make sure you keep your records. Make sure you're using a child care provider that's actually going to provide you with their tax ID number and their name and their address. Hopefully you know their name and their address if you're leaving your kids there. But a lot of times people will get to the end of the year and they'll have left their kids like in an in-home type daycare situation. And when it comes time to say, hey, we need to take the child care credit, the person will sometimes say, oh, I wasn't planning on paying taxes on that.
Ooh, okay.
So make sure if you are using a smaller daycare that you have those conversations up front and know that you're going to be able to get the information you need to get this child care credit when it comes time to do your taxes.
So I have a question. I hope this doesn't take us way off track, but for childcare, and this probably varies from state to state, is my guess. But for childcare, does it have to be in a licensed daycare to be able to claim the deduction, or not necessarily?
Not necessarily, because you could even, like, if you had a nanny coming into your house that you were paying, that you were handling the nanny payroll correctly, you can take a tax credit, a child care credit for that as well. So make sure, like, if you've got something interesting, again, always talk to your tax professional about your situation. Everything I tell you is general. And your tax professional is going to know your situation and be able to give you advice specific to you.
Makes perfect sense. And if I took the option, see, because my kids are grown, so but I'm paying for pet care for my new puppy. But I have a hunch that's nowhere in this discussion or any discussion when it comes to tax credit.
Unfortunately, no. It would be nice if our four-legged friends could give us some deductions as well, but most of the time that's just not going to happen.
All right, then let's just go right.
Nice try.
Thank you. Let's just skedaddle on. I'm very creative when it comes to taxes. Okay, so number 3 is hire your younger child. And this might not occur to many people, but how would we do that?
So if you are a sole proprietor, a single member LLC taxed as a sole proprietor, or a husband and wife partnership, you can hire your kids, pay them wages, and not have to pay Social Security, Medicare, and FUTA, federal unemployment tax, on them. So not only are you getting labor, not only are you developing work skills in your kiddo, but you're also not having to pay some taxes. Now, other entity types obviously can hire their children and not get those payroll tax benefits that I just talked about. But let's go further, because now your kiddo is going to get a W-2, right? And with these new tax rules and the bigger standard deduction, your kids can make up to $12,000 in wages, assuming they don't have any other income, and not have to pay any taxes on it. So now you've potentially done several things. 1, work ethic for your kid. 2, no more whining about how they're going to pay for whatever game they want. They actually have a paycheck and they can start budgeting for that stuff. 3, you've just potentially shifted some of your income from your higher rate down to your kiddo's 0% rate. Okay, so there's some beautiful tax planning that happens there. Now, what can the kids do with that money? Obviously, they can use it to pay for their car insurance. They could use it to pay for their games and their movies and all those other things. But they can also take that money and use it to start saving for college. These same kiddos, now they have earned income. They can contribute to a Roth IRA. $5,500 they can put into their Roth. And I'm laughing at myself right now because I'm like, I think that number went up for 2019. The hard part about being in taxes for years to fund their taxes later. Okay. So hire your kids.
That's so good. Julie, I'm having a few technical. Can you hear me okay?
I can't hear you.
Okay. Yeah. The software that I'm using just kind of did a little glitch. So I'm back. Okay. Good to know. So I wanted to know, you said hire your younger child. What is the age limit? Is there an age limit on the low end?
Every state probably's got some child labor laws that you have to take into account and make sure you're thinking through. But you have to be reasonable. Like, what's your 1-year-old going to do for your business? That's going to be, reasonable to compensate them for. Probably not much, unless they're like in ads or something for you.
Sure.
Do you know what I mean?
Sure. Yeah, makes sense.
But you start looking at kids that are 10 to 12. Those guys can probably do some filing for you. They may be able to clean the office for you. Kids, 16 to 18, 14 to 18 even may be able to do more stuff in the office. And so, think about what's reasonable for them to be doing. If you have a lawn care company, they could go out and mow lawns, right?
Sure.
So think about what's reasonable for them at that age and make sure that the compensation that you're paying them is reasonable as well, so that it doesn't look like it's funny business.
The IRS doesn't really like that funny business, does it?
No, for lack of a technical term, I'll call it funny business.
It's a good word or phrase.
It is.
2 words just for the record. Okay. So we've talked about hiring your younger child. Now let's talk about hiring your older child.
Okay. Who loves the thought and who feels 100% prepared for the cost of college for their kids?
I'm sure some
Probably
people
not
do.
most people.
Yeah.
Some people have got it all under control. Other people are like, oh man, this is expensive. So we've talked about a way with your younger kids to get them working and start saving that money that they earn either in a Roth or they could put it in college savings, but they can start saving for college. But if you've got an older student, there is a way to have your business pay for their college education, or part of it anyway. And so there are tuition assistance programs that are allowed by the IRS. Okay, as an employer, you can pay up to $5,250 a year as a tax-free benefit to your employees who qualify. Okay, so things that you have to know about qualifying. You'll notice I said this has to be an older kiddo. Children need to not own the business. And in order for them to be considered not owning the business because you own the business, they have to be 21 years or older.
Ooh.
So
okay.
Your 18, 19, 20-year-olds that are going to college, this solution isn't going to work for them.
Okay.
But your older kids, it could. So they can actually come, they can work in your business. You can set up this qualified employee tuition assistance program. And you can offer that to your employees. Now, if your child happens to be your only employee, that's the only one that you're going to have to pay this for. If you have other employees, you potentially have to offer it to everybody. So this is one area where you really want to make sure you've, dotted your I's and crossed your T's, really sit down with your tax professional and see if this is a good fit for you. There's also really great tax credits for education that may give you as good of a benefit or a little bit different benefit than this. So really talk to your tax professional and see if this is the right solution for you. But it's one creative way to get a tax deduction out of paying for your kids' college education.
Yeah, it's very creative. What about the 21-year-old? Is it okay if they still live at home? Can they work? Is there any differentiation for residents?
So yeah, they need to not be your dependent on your tax return.
Okay.
So if they qualify to be treated as a dependent. So if you're paying, if they're living at home and they're a full-time student and you're paying over half of their costs, they're still a dependent. So they're not going to be able to qualify for this.
Okay. Can I throw one more curveball at you?
Yes.
What if they are not your dependent from a filing taxes standpoint, but they are still your on your medical, right? Because you can cover them with your medical,
right,
up to age 26. Does that matter?
That does not matter. As long as they are not your tax dependent, they're not a qualifying child for you.
Okay.
You should be okay. But again, this is all general. Talk to your tax professional to make sure you get the rules that are very specific to you. And I'll say that many times because you know what? Each one of these nuances, you probably have 7 more little nuances to the story.
Right.
That until your tax professional asks you all 20 questions, you're not going to get the right answer.
Well, that's fair. And I have to say, I don't know how many of these shows we've done, but I've never been able to stump you. Hard as I try, I'm going to have to do more research next time and see if I can just
give me a hard question. Give me an extra hard question where I'll be like, JennyQ, that is a great question.
Let me do some research and get back to you. That's my goal.
Answer in the comments.
Exactly. Okay, number 5, we're bringing this home. Healthcare. 5 ways your kids can be a tax benefit for your business is healthcare.
Well, one of my first examples of kids costing money is breaking their arms, doing all these, they hurt themselves, they end up sick, they end up at the ER because they shove something up their nose. It's always something with kids, and you have to treat them because that's your job as a parent. So how do you make the most out of that? And so one strategy that we do sometimes with small business owners around healthcare is looking at a health reimbursement arrangement. Now, again, not everybody's going to qualify for this. We're looking for sole proprietors. We're looking for single member LLCs taxed as a sole proprietor. You can also do this with C corporations where you've just got husband and wife as employees. So these are small family-owned businesses, basically, that I'm talking about right now. So great example is you've got a business and you hire your spouse as an employee, and you can offer health benefits to this employee. And one of those types of benefits is a health reimbursement arrangement. And a health reimbursement arrangement is where the company sets aside a certain amount of money that they will reimburse for their employees for medical costs. So you've got health insurance, but you've got deductibles that you've got to pay out of pocket. You've got co-insurance and all these things that you need to pay out of pocket. And the health reimbursement arrangement can repay your employee. Now, conveniently enough, you own the company, your spouse is the employee, your child is also a beneficiary under the policy. And so you've just converted those medical costs for your family into an employee benefit. Okay. This is another area where you really, 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 did I say really? Need a professional involved. A third-party administrator is great. They have companies out there. One of them that I know about is called Task, TASC, that specialize in doing these HRA accounts for small businesses. And so it's really important to have that in place because you want to make sure you set this up right. You want to make sure you're paying your spouse reasonable compensation for the work that they're doing. And that reasonable compensation is both the salary you pay them plus the health reimbursement account benefit that you're giving them. So let's say you put, $5,000 in the health reimbursement account and you're paying them $5,000 in salary. They better be doing $10,000 worth of work. Right?
Oh, okay.
And I always like to caution people before they do this because having your spouse work for you can be tricky sometimes, right? So make sure you've considered like the cost benefit analysis. Is there a cost to your relationship, and do the benefits, tax savings outweigh those two? So think through that carefully. But this is something that I definitely encourage people that, like I said, sole proprietor, single member tax as a sole proprietor, or a C corporation with just husband and wife working for the company. Those are 3 areas where this seems to be a good fit. Bigger companies obviously offer HRAs to their employees too. And if you've got a whole bunch of employees, you can do this for your employees as well. But you're going to get the most bang for your buck and really maximize what you personally get to deduct when you have just that small family unit. Because otherwise, you got to pay for it for all of your other employees as well, which isn't always in the budget.
Makes sense. Even though it's very a little bit confusing, which makes me, again, so happy that people like you do what you do so that we don't have to learn all this.
And I love the third-party administrators that do these specific plans for small businesses because they walk them through making sure they're compliant. They walk them through the process of submitting claims and getting reimbursed. They walk them through all of that and kind of hold them hand. Some of them even offer audit protection around this. So if they are audited around this, they'll actually step up with you and and represent you in front of the IRS if you are audited. So it's important to have a good third-party administrator in this, and it's important to really understand the rules. We obviously skimmed on it. There's a lot of rules around this that you want to make sure you follow, but it's something worth looking at.
Makes sense. So good. So good. So I would love to have people, whether you're watching live or the replay, comment which tip from today's show might be the most beneficial to you. Share that in the comments. And quickly, while people are processing that, let's go over the 5 tips again, Julie. There was the new child tax credit rules for 2018.
Right. We got new child tax credit rules, no exemptions anymore. Things have changed. So that's the first thing to know. And then we've got the other dependent credit as well. So make sure you know you qualify for both of those.
It might work out better for people. Because when I first heard it, I was like, okay.
Yeah. Child care. Look into an FSA plan. If your spouse has one, great. If it makes sense to implement one in your own business, great. You may or may not qualify for it based on your entity type, based on like the legal formation of your business. So make sure you know about that. And if neither of those work, you got the child care credit on your 1040. So that's number 2.
Okay.
Number 3 is hire your kids. Your kids that are still young and living at home and able to work, put them to work. I started cleaning my dad's office, I think, when I was 14 years old. And it was a great first job for me. But you can pay them wages, and you don't have to pay Social Security, Medicare, or federal unemployment tax for your kiddos if you meet the right criteria on that, and make them save that money for college. Okay?
Yeah.
So there's number 3. Number 4, if you have an older kiddo, 21 or older, that's working for you as a real employee in your company, you may be able to offer a tax preferred educational assistance program for your employees, which happens to be your child. So it's up to $5,250 per year. You can give them tax-free or reimburse them tax-free for their college costs. So that's a way to get that deduction into your business. And the last one was healthcare. Healthcare costs for your kiddos are expensive. And if you're self-employed, you probably have a health insurance policy with a big deductible. And so using a health reimbursement arrangement within your small business may allow you to take your personal medical expenses and turn them into an employee benefit if you have your spouse employed by you, and they're a real W-2 employee getting a paycheck from you.
Very good. Okay, so I want to share with you, I think we've got a few more minutes here. Mark says, I think employing my 17-year-old son might be wise so I can pay him and keep the money in my house, but pay less employer taxes as a whole.
Yes, absolutely. It's great. I did stuff with my daughter, and it was really nice to, honestly, it probably cut down on the allowance I had to pay out. Which is not deductible, by the way. And it also taught her kind of how my business worked and what to do in it. So I think that's a great idea.
Awesome. Very good. Well, I look forward to seeing more comments come in as people have a moment to watch the replay. So Julie, thank you so much for your time. These are always useful. You guys, there's a full library of 5 tips for small business owners right there on the Spark Accounting Solutions page. Feel free to peruse those. And if you happen to watch one that was broadcast a month ago or 6 months ago, leave a comment and ask any questions that you might have.
Awesome. Would love to see those.
Awesome. Very good. Thank you so much, Julie.
Thank you.
All right.
See you next
Have a great